Hi friends, welcome back to the channel. If you have been wondering on how to start your investment journey, then you are in the right place because you have been confused by various YouTube videos or advices. But in this video, I will be giving you a step-by-step process on how to start your investment journey for beginners in 2025. By the end of this video, you will be confident enough to start your own journey. So let's skip into this video right now. So let's come to the first question. Why do you want to invest? Well, the answer is simple. Investing is how you can grow your money by outbeating the inflation which is going in our India right now and work towards your financial freedom. For example, let's take it like this. If you have been saving your amount in a savings account or in an FD, you will be getting 3 to 5% as a return. But if you invest the same amount of money either in a stock market or in the mutual fund, you will be expecting a return which is lower like 8% or in an higher of 12% return. So it is good way for you to earn more money which can outbeat your inflation rate which is 7% right now in India. So now let's see the types of the investment which is available for you in India right now. There are 4 types of investment which are stock markets, mutual funds or index funds, real estate and bonds. So let's see it one by one. First one is stock market. When you buy a stock, you are essentially owning a small part of the company. If the company does well, then your stock portfolio of the company will go up. But it is also works in the vice versa. If the company doesn't do well, your portfolio will goes down. So it is like an high risk and high reward ratio. If you are willing to take more risk, then you can bet on the company's future and you will be getting a high return. But in the same time, if the company doesn't do well, your money will be lost. So make sure of that. The second type of investment is bonds. Bonds is nothing but giving out loans to the big companies where you can have a steady flow of income which has less volatility, less risk and less reward, which is an opposite of the stock market. I advise each and every one of you to have bonds in their portfolio to diversify the risk. The third one is index funds and ETFs. These are my best option for beginner investors because instead of buying an individual stocks, you will be buying a basket of stocks which will be given to you by either a fund house or mutual fund distributor. Here you can mitigate the risk and not only that can be easily managed also. And the best one which I recommend right now is for the beginners is Nifty 50 index, which will given like minimum of 12% of returns for each and every year. The fourth option is real estate. Here you can buy property to rent it out or you can sell it on the later date. But here you need to invest a lump sum of amount to buy the property, and not only that, before buying a property you need to make sure that it is in that development community, otherwise you will be losing an ample amount of money in that investment too. So these are the 4 types of investments which I recommend right now for the beginners in the 2025. If you like these type of contents, make sure you subscribe to my channel because every investment portfolio comes with a risk. So understanding the risk is the key tolerance. If you are comfortable with your portfolio losing value temporarily or you expected to grow it slow and steadily over time for a year. The golden rule here is diversification. Don't put all eggs in one basket. That is a famous quote by Warren Buffett. Make sure your investment portfolio is across all the assets so that you mitigate the risk and your growth will be steady and still getting decent returns. Now let's talk about why you are investing for. Whether it is for your retirement, to buy an house, to buy a car, for your marriage or your children education, you need to have a certain goal. Based on your certain goals, we can diversify the portfolio. Setting the clear financial goal will help you to start the right investment and be on the track. I will upload a separate video on how to set up your financial goals, so make sure you follow this channel. For example, if you are saving your money for 20 years, then you are entitled to take some more risk on your investment. But if you need the money for exactly in 5 years, either to buy your car or for your marriage, then you can't take more risk. So you make sure you have bonds in your investment portfolio. Alright, here is the part you have been waiting for. Let's see how you can start your investment journey. Follow these steps. One is opening your brokerage account. It can be either Zerodha, Grow, which is your choice. Next one is choose your investment. For beginner, I advise you to choose index funds or an ETF so that it can mitigate some risk and it will give a good amount of return in the long term. Start small and stay consistent. Always make sure to invest a small amount of money on every month regular basis so that you don't need to worry about either the market is up or down, and not only that, it can also mitigate the risk. And this is called like dollar cost averaging, which helps you avoid the stress of timing the market. The common mistakes the most people will do in investing. Let's see about that. If you avoid these kind of mistakes, which will save you a lot of money on the long run. First one, trying to time the market. Nobody can predict the market. Instead, just focus on investing for the long term so that your returns will be good. Not watching the fees. The high fees will eat your returns. So make sure you always choose the funds which has a low expense fund, like either it can be 0.2 or 0.5. The third mistake is panicking during the market will always go up and down. So make sure you don't panic and always be consistent and do the regular SIPs every month. Now let's see the power of compounding. Here is the most exciting part, the power of compound interest. Let's say for example you invest 5,000 rupees each and every month for 30 years at the expected return of 12%. Then you will be having exactly like 1.7 crores. And most of this comes from your interest, not from your contribution. So there you have it. Investment doesn't have to be scary. It is very much simple for you to start right away. Start small and stay consistent and let that time do the heavy lifting for you. If you have found this video useful, make sure to subscribe to my channel and click on the like button and also share with your friends.